If you are new to day trading or have tried to learn how to day trade and have just been overwhelmed by the amount of results online, then this video is for you. So one of the main problems I struggled with was when I was trying to learn how to trade, whether it was looking up books on Amazon, links on Google or YouTube videos. Whenever I would search how to day trade, how to learn how to day trade, there would just be so much, and it's very hard to know what you actually need to focus on and what you should actually put your time into learning. So this video will be about those things that you should learn. So here's this triangle. This is the big three. If you've been learning about trading, you might have seen this before, but it's risk management, your system, and psychology. So going right into the bottom right corner, we have your system. So your system is made up of two things, in my opinion. It's technical analysis and your edge. So the first thing you need to learn is technical analysis. That's how you view the market, whether it's based on supply and demand, support and resistance, trend lines, things of that nature. You need to learn technical analysis. Now, like I said, there's many different sources out there for it, but I would recommend either a simple book or 2 to 3 YouTube videos. Take some notes. Definitely watch a few different YouTubers, kind of get a feel for differences between them, but just get a good understanding of technical analysis. You don't need to know it perfectly because you're not. You're gonna learn most of that by actually going and doing it and charting. So learn a little bit about your technical analysis, and then actually get onto a broker and start charting and learning how to find these technical points. And the second part is your edge. Now your edge is basically when you see a set of criteria or variables in the market that presents you with an opportunity to take a trade, and you think that trade has has a higher likelihood of going one way than the other. And there can be infinite amounts of edge. It could be when X, Y, and Z happens. It could be based on this market context and how price is. This is what I'm going to do. It could be all these different things, and no edge is better than the other if you don't know how to actually use the edge, which we'll get to later. But an edge is something that I would recommend, again, searching for on YouTube. It probably won't be called an edge, but it might be called a strategy, or after you find whatever YouTuber you like from watching those technical analysis videos, maybe look into their strategy, see what their edge is. And if not, there's always courses. That was one thing that I found to be really helpful to me, is just to buy a course from a YouTuber I really enjoyed the videos of, and in that course they laid out their edge, everything. So that was very beneficial. The next part is risk management. Risk management. First, I just want to get rid of this kind of misconception that I had. I don't know if other people will have it, but it's the risk versus the cost of a trade. So when someone says, I risk $25 on a trade, that there's a difference between that trade did not cost them $25. That trade, maybe cost them $100 or $150. They're not willing to lose everything they put on that trade. They're just willing to lose a certain amount of it. So that's all that is. I was really confused with that at the beginning, but got it under control now. Along with other parts of risk management, you're going to want a preset stop loss. That means before you enter the trade, if we reach this level, if the market reaches this level, I'm out of the trade. And then a bunch of YouTubers will say, position size no more than 10% of your account to lose per trade or something like that. And with that, it's more based on what you're comfortable with, I would say. Obviously, you don't want to be risking, half your account, but I don't think it needs to be a number like 10, 20 exactly. It's based on your account size, how comfortable you are, how risky you want to be. But the main thing is you always want to be able to have leftover capital, and you never want to risk a full position size on a trade. The third, and probably the most important part of this triangle is training psychology, and it's make or break, and it has connections to the other two parts. So that's why it's the most important. So first, the connections to your system. It's more to your edge, that part of the system. Um, there's no edge that's going to be perfect. You're not going to win 100% of the time. Maybe a lot of successful and professional traders might only have a win rate of 50 to 60%. Um, but they know that with that edge and proper risk management, if they take that trade 10 out of 10 times and say they win 5 to 6 of those times, those winners will be bigger than the losers, and therefore they'll be profitable. But you have to think in probabilities. If you, for example, this is an issue I found a lot this past summer. I would maybe try to play a trend line breakout, and it wouldn't work. And then I'd say, all right, I'm never doing that again. And then the next time, it soared at the trend line breakout, and I was just sitting there with complete FOMO. So the fix to that is that if I really wanted to trade the trend line, I should have taken that opportunity every single time I saw it, knowing that some of the time it's not going to work and I am going to lose, but knowing that the other times that it does work, I'll make more money than those times that I lost. And then psychology also has connections to risk management. You only want to lose what you're willing to lose. So with a predefined risk, say you're about to enter a position, and say it's just the stock is at $100 and you're just buying a share, and you say, okay, I'll hold this. I'm long until $95. At that point, you've predefined your risk of $5. That's what you've accepted that you might lose, and you have to be willing to lose that $5. And then for just psychology as a whole, I would really recommend the book Trading in the Zone by Mark Douglas. I'll put that up on the screen, but the way he explains things and the way he uses stories to kind of put a picture in your head of what some of these emotional mistakes you might be making when you're trading, he just does a very good job of articulating that, and I can't even get close to the same type of clearness that I think it provided. So I would recommend that every single person who wants to trade read that book, and don't just brush it off, because I think since I've read that book, it's changed my trading. And for a while, I wanted to put it off and just try to figure it out on my own. But that book, what it'll do is it'll remove emotions and teach you to think objectively and trade objectively, and those are very, very important for a successful trader. Just a few more things before wrapping up this video. I wanted to talk about some habits of a successful trader. Number one is journaling. You should be journaling every single trade. That's another mistake I made at first. I wasn't journaling every trade. I would say, oh, I lost 100 this day, I made 50 this day, and have no idea how. I could kind of remember the trades, but not know exactly how. It also prevents over trading, because if you have to write a full page on what the reason why your trade was, your market context, your thesis, all that type of stuff, you're not going to want to take 4 to 5 entries a day, because you're not going to want to write all that. And if you are taking 4 to 5 entries a day, unless you're a super small time frame scalper, you're most likely over trading. The second habit is screen time. You can watch all the videos you want, read all the books you want, but you're never going to learn unless you actually sit at a screen every single day, or a majority of the days the market is open. You just sit there and learn, and just trust that over time that screen time will build. And thirdly, patience in the process. If you want to get rich quick, which up front a lot of us do, even me, but deep down you have to realize that it's not about that, it's about the process. It's about learning how to trade, learning how to make good trades, and the money will come.